but how many of those customers are sharing what you've done with others, right? So you get some of this flywheel effect. So I like to think of product market fit of you have a certain amount of customers who pay for your service, who stay, who don't leave, who don't churn, and who would actually throw a ruckus if you would take the service away, but also who tell others about it.
Welcome to the Business Ownership Podcast, brought to you by Awareness Strategies, helping you navigate the waters between entrepreneurship and ownership. Hey there, peeps. This is Michelle Nedelec, and I'm super glad that you're here with us today because I'm here with my most amazing guest, Stijn. Stijn, thank you so much for being here with us today.
Thank you for having me, Michelle.
Awesome. So give us a highlight of who you are and what you do for business.
Yeah, I'm a marketer like you, although I didn't start my career like that. I started as a software developer and landed at Microsoft in the early days and became a marketer there. And ran global marketing teams for small business, for the office team. And at some point I left. I sort of decided that the latter part of my career had to be more about how could I do something on my own, right? Of course, did some interesting things at Microsoft, but pretty sure those would have happened without me as well. So yeah, started a couple of companies and all in software. So I've been in software for more than 20 years. And in the last couple of years, been more on the investing side, consulting with CEOs and founders after having a couple software startups myself. And these days, I think it's more than just marketing. I help CEOs, founders build their go-to-market teams, marketing, sales. Wrote a book on it. So thank you for having me. And so the book T2D3 on sort of how to scale after you reach product market fit. How do you do that? I mean, there's a lot of books on how to get there, right? The lean startup and 0 to 1, but sort of what happens right after product market fit is often, it's much harder, right? You need to do many things at the same time, reduce churn, drive up your funnel size, get your conversions up, make sure all that leads to customers buying more from you, ARPU expansion. So yeah, so wrote the book and that's kind of the last couple of years has been my biggest, where I spend most of my time now helping companies implement some of those, that playbook and learning from them. And as I kind of did that, I also started an agency, Kalungi, that just is, doing outsourced go-to-market for B2B SaaS startups. So you can outsource your full marketing and sales to them. But that's an agency I started. I'm more sort of working myself as an investor, as an advisor, with some of the owners and the founders.
Very cool. So for those who don't know, what does T2D3 stand for?
Yeah, so it was funny when we picked it. So my co-author and I, Mike Nordfield, he did all the illustrations and a lot of the more detailed research. When we picked the name, we were leaning towards something that was interesting, that would make people look up. Like, hey, what is that? What does that mean?
Right.
But also has some connection with the people that we really, when you think of nailing a niche, the people that really would gravitate toward it. And T2D3 stands for triple your revenue, your ARR, 2 years in a row, and then double it 3 more years in a row. And it's an acronym that's usually described, usually used to describe the growth curve of early stage startups that hit their stride and that really get to high scale. One of the partners at Battery Ventures came up with it, I think, in 2015 or something like that. And so yeah, we ended up doing a lot of the work in the last 6-7 years on how to actually do that, how to hit T2D3, and that's what the book's about.
Love it. So are you working mostly with software companies? Are you working with any kind of business that wants to scale? Who are you with?
I think you kind of stick with what you know, right? So B2B SaaS under 15, 20 million, that's really my, where I feel at home, where I feel I can add the most value. But yeah, I ran a 500 people team at Microsoft with a multi-billion-dollar software business. So there's plenty of things we can apply to larger companies as well.
Right.
But it's definitely not as applicable as it is for the smaller companies who are just getting started and who just need a playbook.
Nice. Love it. So for those who don't know what SaaS is, I think you have to be under a rock right now, but explain what SaaS is for those who don't know.
Well, I don't think if you ask the same question to multiple people, you'll probably still get different answers. But yes, software as a service. For me, the service part is really what's often the most confusing to people, right? When you go from selling someone something that they end up owning versus selling something that you need to keep providing a service, which is not unique for software, of course. This whole notion of now having to deliver value over and over again is, I think, what makes SaaS truly unique, right? That you expect customers to keep paying you, which means then for you as a software company, you need to keep adding value, right? And keep providing value. And that's really unique. And then more the technical side of how would you define SaaS? It means that the software is delivered from the cloud, right? As a service that you digitally subscribe to, that you keep paying for. That's usually also all running on the same version. It's one code base, single tenant, right? Instead of multiple versions of the software. So every customer is using the same. And then another a key characteristic, I think, is that it's elastic. You can scale the service up and down, right? How much you need, how many users you have, how much data you save or store, right? All those things are very flexible, which makes it very, it's the winning business model, right, of the last 15 years, because it's so suitable for the dynamic business world we live in today.
Absolutely, it is. So when you're looking at companies, SaaS companies, I want to take me through, I'm not taking you anywhere, you're taking me through the kind of the startup, somebody that has an inkling of an idea of a software thing that might work and kind of the problems they have, all the way up to kind of when do you get to pass your clients off and go, hey, you're big, get out of my nest, go do something else. So start me off with the little guys.
It's kind of coincidence. It's really coincidence. We didn't prep this question, but when you look at the wall behind me, there's a baseball diamond, and it actually describes the phases that you just asked the question about, Michelle. Going from what I like to call MVP, a minimum viable product, that would be first base, to product market fit, second base, and then to T2D3, this sort of scalable growth stage, that would be third base. And ultimately, home plate is often described as the rule of 40, getting to profitability, getting to be EBITDA positive, or get to 100 million. So there's multiple versions of home plate. But yeah, so if we think of those 4 stages, so MVP, proving that some problem is worth solving, right? Finding not often a lot, but a handful of customers who say, this is important. And we are maybe not even voting with our wallet, but we vote with our time, that we like to use your product, we'll give you feedback, we'll help you build it, help you finish it. That's often how MVP is defined, right? And there's a lot of books on that. There's a lot of methodologies to test ideas and to do quick product iteration, right? Things like sprints, etc. So that's first base. And then second base, product market fit, is some form of economic viability that you've hit, right? Now you have, let's say, hundreds of customers or thousands. And what is helpful for SaaS, I think, is to make the definition not so much about how many customers you have, but how many of those customers are sharing what you've done with others, right? So you get some of this flywheel effect. So I like to think of product market fit of, you have a certain amount of customers who pay for your service, who stay, who don't leave, who don't churn, and who would actually throw a ruckus if you would take the service away, but also who tell others about it, right? That's kind of is my definition of product market fit. And whether that needs to be 10 customers that pay you hundreds of thousands of dollars a year, or thousands of customers who pay you $10 or $20 a month, it doesn't really matter. But you have some form of sustainable economic proof point. And then the trick now is when you hit product market fit, that's usually when investors are willing to invest in your business, when you might be willing to double down and go all in and put every bit of revenue that you get back into investing in scale. The tricky thing is now you get to product market fit usually by doing 1 or 2 things really well. And you're in marketing, Michelle. It could be an organic marketing sort of stride that you've hit, right? Or your PPC is working really well, or you have a partnership or a sponsorship that got you to product market fit. But to get to T2D3 growth, if you need to triple your ARR, those first 2 years, it's not enough anymore. You now have to grow your marketing, grow your MQL volume, right? Your pipe volume. You have to grow, increase your conversion rates. Those leads have to convert at a higher rate. At the same time, they need to convert into bigger deals, right? The ARPU, the revenue per unit, per user needs to grow. And you need to make sure that all your customers stay with you. So that's really tricky. That third base to get to T2 D3, doing all those things at the same time is really critical. And then, of course, at some point you'll shift from high scale growth where profitability maybe is less important to you. You go to, hey, how do I make sure that I hit what's called the rule of 40, where my profitability goes up and it sort of starts to complement the growth rate where both of those together, and that's really home plate. So those are the 4 stages that I like to think about it, and that's the baseball diamond, because you cannot really go from second base to home plate. You have to get to third.
The umpires don't like that. No?
Yeah.
You can't just go through.
But you've probably seen a lot too, right, with your customers, skipping MVP or skipping product market fit, thinking that you can suddenly get thousands of leads because you think your product is fantastic, right? It just doesn't work like that.
Right. Well, and I'm loving the analogies. And you mentioned something that was fun, that they're not doing it within 2 years. SaaS has a unique market issue in that it has to grow fast. Almost. Otherwise, it loses its dynamics in the marketplace. Whereas, if I'm a plumber or a lawyer, I don't really have to grow my business.
Yeah, the needs will still be
years.
there in a couple of years.
Exactly.
Right?
Yeah. So, yeah, how much fun is that, kind of playing with that idea that, like, how long is this going to be a necessity? Because, I mean, you have something like Microsoft where, yeah, everybody's probably going to always have to have Word docs and Excel spreadsheets. But then you get something else and it's like, dude, you got to take advantage of this now.
By the way, that was my first SaaS business. So I ran product marketing for the Office team when we moved to Office 365. And this was I owned it for the small and medium business part of the market. But that is a SaaS business too, right? So that you could argue that commodity product is the wrong term, because they have a ton of innovation, they still do. But it's a product that a lot of people need, and they'll need it for a long time to come, right? Mm-hmm. But your comment is very true. When you, especially are an early stage startup, and you're doing something that's innovative, that's new, there's a small amount of time that you have to get enough market share, right, to become one of the winners. And there is a little bit of a winner take all economy now, right, with these type of solutions, because whether it's the top rankings on the organic search results, or getting the right partnerships, there's only so many. Most of the business will go to the top, the 2 or 3 top players. So the clock is ticking, and that's also why I think some companies tend to go, maybe sometimes try to cut a corner, especially when they get funded. They start spending their way to the top without making sure that the customers actually love their product and stay with the product and don't churn. But you're right, there's a time, and I think it's really important to hit your stride fast enough, and to get to the finish line quick, is to make sure that you have a fundamental strategic clarity. And I always think your strategy can be a couple of things, but you have to pick one. When you are in a category, Michelle, that exists, there are, in the software world, you have things like Capterra and Software Advice. You have these comparison websites. And if you're in a software category that exists, where there are other players already, then it's probably hard to go try dominate that category. So you now need to say, hey, am I going to either disrupt the category? Am I going to do something that nobody else does yet, that maybe services a group of customers that is over-serviced by my competitors, right? And there might be a niche there that you can really nail. Or am I going to differentiate? Is there a group of customers who's not getting exactly what they need, right? If let's talk about CRM, right? A very crowded software category. Am I going to build a CRM product just for whatever, butchers, right? Or pick something. And especially with our move to eating less meat, that niche is getting smaller and smaller. But maybe there's still a need there for a very unique CRM product that can do some things that only butchers need, right? So, but that's how you would pick your strategy. You either differentiate, you do something better than everybody else because you're doing it for a group that is underserviced, or you disrupt because you find a group of customers. This is what Canva did with Adobe, right? Canva basically, they didn't build better design tools. They basically just said, hey, there's a lot of Adobe users out there who don't need Adobe. It's too much for them, right? So they created something a little simpler and a little cheaper. So having that strategic clarity helps you get faster to, I think, to build something that's sustainable. And a mistake that I often see early stage companies make, that they're so excited, they're so convinced that their solution is fantastic, that they think they can dominate a category. They don't make one of those choices, and they try to win every deal and to go after every different opportunity, and that's just extremely costly. And it's usually not a way to get to success.
Awesome. So when somebody has an idea, or they're building their SaaS, they're in that phase where they're now looking at you to do it. What kind of mistakes do you most often see people make when it comes to the marketing of that product?
Well, specifically marketing, our field, Michelle, marketing is such a broad discipline. It's very easy to get lost in the 20 or 30 things you can do, right? From focusing on branding and creating a logo to figuring out content marketing yourself before you actually hire someone who's done it before, or figuring out your product positioning and pricing sort of along the way without being thoughtful about that, and making, for example, how you price your product part of your positioning. Are you a premium product, or are you a value product, etc.? So I think if a founder or a leader of a small software company is not a marketer or is a sales professional, trying to wing it themselves because they think it's a relatively easy thing to do. We all can do marketing, right, Bill? That's something I see go wrong often. And then, or they hire people who are just not good enough. Because when you're small, even when you get funded, let's say you're a Series A stage, you got a couple $1 million in growth funding, you're still not going to be very competitive recruiting really talented people who've done it before, because you're competing with the Microsofts and the Googles of the world. I'm in Seattle or Amazon, or you're competing with the Series C stage startup, right? Who can pay someone $150,000 where you can maybe only pay them 80 or 90, and you're just not going to get the talent. So finding people who've done it before is critical, and sometimes that means you go maybe the part-time or the freelance route first. Before you commit to hiring people, and then maybe not getting the talent you need.
Well, and does that ever, like, I can only imagine that in an industry that's so competitive and so many people are like, it's the idea that pays off really in the end. Like the implementation of it is, yeah, you got thousands of programmers. We can program, we need the ideas. How often are people getting their ideas ripped off, and suddenly they have competition in an industry that they didn't think they had any competition in before? Like I'd imagine it's quite cutthroat, but that's just kind of my perspective on it.
Yeah, no, you cannot sit still, right? It means you'll go backward. This is an industry where you have to expect to be copied or to be imitated, and especially because everything is digital, so there's not a lot of cost to produce something, right? Apple can sort of stay competitive with their iPhone because they own part of the supply chain, right? The materials that actually are used to make the phone. When you're in software, you don't have that. And so, yeah, you need to constantly innovate, Michelle. And I think when you do a good job as a SaaS entrepreneur, listening to your customers because you want them to stay with you, right? Because you're selling them that service that constantly needs to improve, because you're also expecting them to keep paying you, right? It automatically kind of feeds your innovation pipeline, right? It means you learn a lot of things, and things that you don't do that well, maybe things that are missing that customers would love to see. So there's no excuse really for a software company these days to not constantly make their product better. And then I think the whether you succeed or not is usually about execution more than about strategy, because you get all these customer signals. It's more about how effective are you in both incorporating all that feedback into improving your product, but also still, innovating in areas where customers don't have the imagination of what could be possible with your technology. So you have to kind of mix those two. But yeah, I think that's a great point. You have to assume that if you don't improve and make the product better, it will just be obsolete in a couple of years.
Wow. So I had a question and I knew it was going to pop out of my head and it popped right out of my
We'll come back.
I will get, oh, that's what it is. What do you think of the idea and notion of a lot of companies now are with their startup clients saying pay one time, get lifetime access to it? What's your take on that as a
I haven't heard
marketing
that actually.
thing?
I don't think that you're not a SaaS company anymore. You suddenly became I sell you a perpetual right? Which in the software world used to be called a perpetual license, right? Is that what you're referring to?
Well, yeah. So I have seen a trend in software companies that it's to basically it's to fund their self-fund their build out, and they're going, hey, if you sign up now, instead of paying $40 a month, pay $400 and you get lifetime access. And it's in their opinion one way to kind of stop the churn because they're not getting the traction on the $40 that they need for the 12 months. So they're hoping that they can pay their programmers to be able to get it to a minimum viable at that point. And then if they don't, well, then, hey, you have lifetime access to a piece of crap. That's awesome.
Got it. Yeah, I have, now that you mentioned it, to give the example, I've seen that as part of how you fund your company, like Kickstarters and things like that, that provide you then a certain rights to usage that nobody else gets. And of course, it's very common in content where you buy content as a subscription, but you can buy it forever by paying maybe a 5 or 6 year equivalent of the subscription fee. I think on the content side, you see that a lot. When it comes to a SaaS company, it's just all very much driven by what's your cost to service, right? As marketers, we usually look at what's called CAC, right? Customer acquisition cost, as the cost of getting a new customer, right? The marketing, the sales investments, etc., to get one. But I think what's really critical before you do something like what you described is that you understand what your cost to service those customers is, right? If your service runs on an infrastructure that you need to maintain, that you need to pay for, where you pay service cost, utility cost, you pay Amazon or Azure for bandwidth and for storage and for compute power, then at some point that will just start. You will start losing money if you give eternal rights, and you still have to pay Amazon. Believe me, every year.
What? They don't just go, oh yeah, sure, take a break. It's all
no,
good.
and AWS and Azure are also notoriously known for increasing their prices all the time, right? So it's a risky proposition. But I can totally see that a startup does it to do some early funding of their company, but you definitely have to be very careful there.
Got it. So let's talk about your clients, people that are reading the book and looking at you and going, hey, I need your help on this. What are some of the principles that you're teaching throughout the book that help them to kind of get to the next level?
Yeah, there's a couple of things. I think the most fundamental is to think of this type of high-skill growth as a multidiscipline effort. You cannot just look at your funnel. You cannot just look at product marketing to expand the revenue per unit, or just look at churn reduction. You have to look at it holistically. So that's one. Two, especially when you're small, you can't really afford to start and stop and start and stop. What happens a lot in marketing is when things don't work, we pull the plug and we try something else. And
I tried Facebook ads for 3 weeks and they didn't work.
Yeah, and the thing is that a lot of these things need a little more time to either prove that they work or to learn and have some real insights that you can use to do something else, or do it better, right? Whether you're testing messaging or you're optimizing advertisements or you're working on an account-based an ABM campaign, right? I've seen this a lot. People start doing outbound email campaigns, which, by the way, sometimes still works. It's not necessarily the best tactic for everything, but let's say you do this and you do it for a couple of weeks or a couple of months. The one you need to get one thing out of a campaign like that, or any marketing initiative, honestly. Either you get leads, you get the results that you're expecting, or you get real insights that are actionable. And I think what happens a lot in marketing that people get impatient, or founders or CEOs get impatient, and they pull the rug under these things without actually gaining that insight and being able to do something with that learning. And then you basically wasted all the money, right? And all the time. So that would be one of the things that that is a theme in the book. There's this term called start, stop, continue. I like to say start, stop, finish. Make sure you finish things and you don't sort of pause them in the midstream. What's another concept? We talk a lot about this notion of your go-to-market strategy being disruption, differentiation, or domination, which in the latter is extremely hard and very unlikely. So to be extremely clear on where you optimize your positioning and your product investments and your pricing and your packaging to support one of those strategies. And then I spent a lot of time on sort of teaching by sharing experiences on how to become a CMO of a SaaS company. Actually at a relatively early stage in people's careers. So a lot of the people that I've coached and mentored, Michelle, are relatively young. They did an MBA, they're still in their late 20s, early 30s. And I believe that with the right education and the right type of best practices, etc., they can be fantastic marketing leaders for early stage companies who cannot afford people like me, old people, who've been at Microsoft and all these, because they just cannot afford us, right? So how do you get someone with an MBA and a couple of years of experience to be a great CMO or VP of marketing for a small SaaS startup? And that's really what the book is focused on, to give those relatively practical tools and templates, etc., whether it's templates for budgets or for campaigns, or who to hire, job descriptions, things like that, to get someone going relatively quick and early in their career to lead marketing for a small company.
Well, you bring up a great point, because I kind of assumed that tech companies were run by techies. But what you're saying is a lot of them
often are, right? Which doesn't always work.
But they're actually getting a lot of MBAs that have the ideas and go, yeah, I know how to run a company. Now I just have to hire the techs to do the thing and fulfill on my idea.
Too. Yeah. I think most founders fall into one or two categories, right? They're either subject matter experts who really understand a problem, like the dentist who built a software company to do dental practice management, right? Something like that. Or you have an engineer who says, hey, I'm very good at building technology, and I'm going to find a problem to apply my skills to. And that's how you found a company. But it's far more, what does not happen a lot is that someone with a sales or marketing or go-to-market background starts these companies. And to your point, sometimes it's an MBA who does that, but it's less likely than those other two examples.
And they both need a lot of CMO help. Yeah, absolutely. I love it. So what would you say is your favorite part of your business?
Working with young people and seeing them reach their potential. That's why I do this, Michelle. I've kind of done the things in my career that I needed to do to be professionally kind of satisfied and be economically healthy. So I'm now really just enjoying working with young people and seeing them lead an executive team, at a young age and have so much impact. It's really cool.
I love that. I wish I had heard that from more experienced people when I was young, because I always thought I was bugging them or annoying them or getting in their way. It's like, no, we actually love helping people that are starting out, because it's so much fun and so exciting.
Yeah, the agency I founded, Kalungi.com, they have had CMOs who started when they were like 24, 25 as interns. Wow. Who became a CMO of a software company like a year and a half later, and did fantastic. And then at some point had 2 or 3 companies that they had been CMO and did a whole rebrand and did a launch of a new product. And then ended up, 2-3 years later, 28, 29 years old, landing a huge CMO gig or VP marketing full-time job with a big company that usually would look for someone in their 40s to do that.
Wow, so, that's awesome.
Really, really exciting.
Awesome. So, I'm going to say, other than that, give me an example of a Cinderella story of one of your clients. Other than that one.
What we've seen a lot is companies who are professional services companies who sell fantastic content and people skills and experience, etc. They want to turn that into software. They want to put it in a bottle, right? And it is really hard to do that without going through those 4 bases in the baseball, let's say, actually to get really an MVP and real product market fit. And when you have a lot of customers who pay you for your services because they love you as a consultant, it's kind of easy to mistake that for product market fit. It doesn't mean that your software is being, you might actually give them the software for free, but they're really paying for you being there. So when we, I'm not going to give you a specific name, specific company, but when we see a CEO succeed in turning the thing that they worked on for 30 years or 20 years, and they've got so much knowledge about a certain problem or a certain industry, and to be able to actually turn that into a software product that now, instead of reaches maybe 20 or 30 customers that they can service themselves, it can now reach thousands of customers. Those are really cool stories. So yeah, I've worked with a lot of software companies that were originally people doing something amazing for their customers and who were able to turn it into a software product and now reach a much bigger scale, which is really cool.
Fun. I love that. So is one of the stumbling blocks that somebody might be having right now is, well, actually, let me rephrase this. What are some of the stumbling blocks that somebody might be having right now? And they're thinking, oh my God, Stijn, I need you so badly. What problems are they having in their business that just makes them redirect towards you?
Well, I don't sell my time anymore, but when think of the book and Kalungi, it's really the people who say, I'm running a business. I'm really excited that I know a problem that needs solving. I'm building software to do so, but I have no idea how to go to market, how to do marketing, and I'm not interested in having a web developer over here and a writer over there who don't communicate with each other. I can't hold anybody accountable. Then this approach might work. Or Kalungi in that case, if you want to just outsource it.
Love it. Love it.
Fit. Yeah.
So I know our listeners are going to want more from you. Where do they buy the book? How do they get a hold of your company? All that fun stuff. Yeah,
the book is pretty easy. It's, of course, the acronym is not, but t2d3.pro, so not .com, t2d3.pro, P-R-O, or Kalungi, Kalungi.com, which is really an agency that does outsourced growth as a service, and the book t2d3.pro.
Love it. And of course, peeps, we will have all of Stijn's links in the show notes. So scroll down, you'll find the links in there. Awesome. So I get to ask you, at what point in life did you know that you were a special kind of crazy enough to think that you could become an entrepreneur?
I don't know. I think it was mostly my wife at some point who just said, stop working for these big companies and just go do it yourself. I did need a little bit of that push. Yeah. I don't know when it was, probably 12 years ago, something like that. Yeah.
That is awesome. I love that. I don't think anybody's given me that answer yet. Awesome. Stijn, you've been awesome. Thank you. Any last words for our peeps?
I love when people produce things, when they get things over the finish line. So the 2 words that I would end on is especially for entrepreneurs, but also for marketers, keep shipping.
I love it. Thank you so much for your time. I appreciate it. And I know how valuable it is.
Thank you, Michelle, for having me.
Peeps, this is Michelle Nedelec. Thank you for being here with us today. Be sure to subscribe to the show and share it with your friends. We love helping entrepreneurs grow.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention. You do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap. They offer full implementation as well if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.